Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I'm Joe Nikruto, and today, as always, I'm here with
Dan Hussey.
Dan Hussey. Today, got some stuff to cover. It's been a big week, a lot of fireworks here today. We're going to talk a bit about corn, beans, and wheat. We're going to talk a bit about cattle and feeder cattle. But this bean market thing here today, quite a reaction. What kind of weather you got? I stepped outside here today on accident, and my goodness.
Yeah, I got a notification earlier today that rain was going to end in Wheaton soon. And I was like, I didn't even know it was raining out. And I look outside, sure enough, we got a drizzle. Yeah, fall weather is here. We're coming out of the frying pan into the freezer a little bit. Not freezer quite yet, but I could see how this quickly turns to some nippy fall weather, right? It was a high of 60 something today. We've been high of the mid 80s over the last couple of weeks. So I'm a little disappointed. Summer seems to finally be behind us.
On the Hoosier side of the ledger, the exact opposite. I walked outside and found myself in the sun, and I'll bet it was close to 80 degrees.
Holy cow, that is crazy.
It's gorgeous. So I had heard talk of some weather in certain spots, just spotty showers here and there. I look out to the north, looks like some clouds there, but to the south, everything looks great. But I'll tell you, Dan, it was toasty, roasty out there. If we can get a few more days like that before the snow comes, that would be terrific, wouldn't it?
Yeah, it really would. Again, I wasn't quite ready for summer to end. Granted, my summer was cut in half with an injury, but still,
Injury.
It's always sad to see that season end. But then again, we are full swing into that harvest time frame, right? Actually, towards the tail end of harvest, or probably anyone south of the Dakotas, probably harvest is just about done because of the good weather and early start that guys have had this year. But nevertheless, right? It's just that time of year. Seasons come and they change.
And the way for people to keep up to date on that, Dan, funny you should say that. If you're looking for timely, concise commentary on the grain markets, sign up for Karen Braun's Zaner newsletter. You've certainly seen Karen's charts online. She's got 86,000 followers on Twitter/X. No exaggeration to say that people really care about what she thinks about the markets. I often say I don't know what I think until I hear what Karen says. Now you too.
That is the truth.
Get her in-depth but easy to understand analysis straight to your inbox. Recently, she put out the de facto WASDE report, since our friends at the USDA are not currently on the job. Government
right. Get the Karen Braun official WASDE report and highlights.
Right.
All of the numbers that you've been missing coming straight at you from Zaner Ag Hedge.
There was a lot of great info in that report. And so, folks, if you're not already getting her stuff, sign up in the link below. There's no cost, no obligation, just like the Zaner Ag Hedge hotline, which you should have already signed up for. And if you have not, get right on that. But both of those things together, daily message on the Zaner Ag Hedge hotline from Ted Seifert himself, telling you what he's looking at and maybe what you too should be looking at. And then some in-depth analysis with Karen as she gathers disparate pieces of information and brings them together to help us anticipate maybe what might be coming down the pipe. Don't delay. Click on that link today. Dan, where should we begin?
I'd say that we probably have the most to say about soybeans, but let's start with wheat or corn. So maybe wheat, just get it out of the way.
Just because we don't really want to talk about it. New lows in wheat today from the look of that chart. And on the weekly chart for December wheat, boy, is that gross. Opened the week at 515 and a quarter. High was 518 and a quarter in December wheat. Low 496 and three quarters. Closed at 498 and a half.
And that weekly chart is up on I'll try to throw those up there for you folks as well as he talks about the weekly. But go on, Joe. Sorry.
16 and three quarters. New low for the move. Funds short, what I understand, well over 100,000. 102,000 Chicago wheat is the estimate. As they came in today, they seem to continue to lean into it here. Technically, I really don't know what we could say about that other than that's a new low and the trend remains down on all scales.
Yeah, today was a little lighter volume as you made that new low, but we've been generally pretty consistent volume-wise over the last couple weeks here and into October. You can see that 18-day moving average that has been resistance. A couple failed. The market failed to get back above it and stay there on 2 attempts in September. Now in October, we've spent every day below it. That downward sloping trend line against the highs has been a stark reminder of that resistance area. lots of levels you can chew your way up and reverse from. We've tagged the $5 figure here in December wheat. Does it stay down here on the weekly close below? I don't know. We'll see. But it definitely strikes me as a bit of an oversold condition in the RSI, maybe in that fund category. And we'll see how they come out in that commitment into the end of this week too, which is unfortunate because I don't think we will get those because they come from the CFTC.
No, you will not.
And so we're just going to have to do our best guessing, which, hey, let's just go back a couple of days ago on Tuesday when they would have done that reading. Man, wheat was almost 20 cents higher. So I'm willing to bet that even if we got that CFTC number this Friday, it's going to be a little bit heavier in terms of the shorts than what we see because we are down at a contract low. And you got to say it, this is the way the chart looks usually right when it forms a bottom, but I'm not willing to place that bet or say that it's in just yet. But we are starting to get some of those initial reasons to think that we're closer to a bottom than a top, being oversold and a few other things, right?
For sure. Corn probably weighed down by wheat a little bit here today.
A little
down
bit, yeah.
5 1/4 on the day, I believe. Opened the week in December corn at 419. High was 424.5, low 412.25. Closed at 413. That's down. This says down 6 on the day. Funds there again, short about 102,000 contracts. Comfortable in that it looked like maybe the funds were going to be under a little bit of pressure with that short trade on the daily chart as we were chewing into overhead resistance over the 10, chewed over the 18, up into the 50. But there again, perfect timing. Perfect timing. Market could not get out over that 50. And not, you and I may debate whether or not today's price action, yesterday and today's price action, outside day yesterday, major follow through here today, technical damage as we traveled through the, what is that? I'm sorry. That's the 100 day. That
100 day is that up there, that blue line. The 50, 55 days where we have settled down into, right?
Where we took out here today, which came in about 415 and today's close near 413. Not a great look. Saving grace, we were not able to get below that low from, what do you have that on what day is that? The first of the month?
Yeah, August 8th here, or are you talking right here? The October 1st low.
Yeah. So we couldn't get below the swing low, but man, that chart looks terrible.
Yeah, it really does. It's not looking good at all, right? It was looking okay up until today, where we just had every opportunity. Even yesterday was probably that first warning sign, but it had every opportunity, in our opinion, to get out over that level, and it just doesn't. That's just not a good look in the short term for this market right now. Unfortunately, right, that just means that we are going to have to continue to monitor that October 1st low. It's a big question on the chart of whether or not it's going to be able to get back out over those levels, right? And now you've got to chew your way back through all the other resistances and resistance levels on the way back up that you otherwise were supposed to be support, right? Maybe on the way back down. So downward sloping trend line against the highs. You can make an argument we're just testing back into that technical level. That's about the only technical supportive level that I can really come up with that we maybe came back and tested or defended here on this chart. Because unfortunately, we're just below everything else, right? Rejection at the 100-day, rejection back at the old lows, old contract lows. It just doesn't look like whatever rally and whatever optimism we had since August has clearly run its course and failed to get any form of sustained move at this point. And unfortunately, that is after yesterday's outside day lower and maybe the continuation lower, that if October 1st lows go, it really makes you wonder if this market's going to have any chance of rallying at this point.
Dan, we don't do this often, and I'm not a big fan of scaling out on the time frame to make technical decisions or to maybe find something positive to hang a hat on. But if you would bear with me and switch to a weekly, that is a rather symmetrical looking consolidation, like kind of a flag there on the weekly chart, is it not?
Yeah, and today we failed to break below yesterday's weekly low. I mean, for all intents and purposes, week over week, it's still higher highs and higher lows. I wouldn't hang my hat on that necessarily staying true into next week, but Joe's not wrong. This looks like a pull, and then the flag formation breaking out over a trend line. And that's just exactly what it looks like. Now, we get back out over 424, maybe even just out over 420 at this point. I'd be willing to say this market could be cruising for a nice move higher, retesting 430s and beyond. At this point in time, unfortunately, this is just, it's kind of at that line in the sand, isn't it?
This market drives down below 410, brings a bunch of bearish sentiment into play, and then magically finds a reason to rally and makes for that 430 with all that bearish sentiment lit on fire and providing fuel. That would be how this would play out, right?
Yeah,
it's going to be
certainly.
It's going to be a consolidative pattern that it continues on in the direction that it was moving prior. We've been moving higher for 1, 2, 3, 4, 5, 6 weeks on this chart, and a 4-week consolidation pattern is a bit extended, right? But if we do find our way out of here, that could be pretty powerful. Now, sitting here today, I'm not sure how does that happen. Maybe continued great export demand, maybe some shifting political stands. I don't know. But, and again, I really don't like to do this. Oh, I can't find anything on the daily chart. Let's move out to the weekly and hope we see something. But this is rather symmetrical, isn't it?
It is. And I think that there's something to be said for the fact that, like you said, there's a nice pennant formation. You've had a couple weeks up, only a couple weeks back, closing above those key levels this week, or above that low of October. Certainly doesn't end the bulls uptrend just yet, but it's certainly, like I said, I feel like we're at that line in the sand and we are threatening the market at this point.
The shifting lines in the sand due to politics, if you look at the November, what I believe is the still prompt November bean chart, opened the week at 1015 and a quarter, high 1030, low 1002 and a half, closed 1006 and 3/4, down 11 and a quarter for the week. And on a daily chart, Dan, I believe that probably looks awful. But after we talk about that, maybe we shift back to the weekly again, because that weekly does not look so bad.
Sure.
Very interesting.
Sure. Back to August of 24, this just completely sideways structure. The market has been very, very comfortable above $10. And I think today we talked within our own groups about how $10 soybeans, it's remarkable we've held it after all the negativity that we've seen. And I think there's a good rationale of why we fell back today. There's a lot of cross currents on these trade deals. Now some very negative things are being said regarding trade deals with China. I'm not going to sit here and rehash it for everybody because the damage was done on equity indices, bonds rallied, but there were a lot of places in the market that were left out of that, which we'll cover later. But
specifically, the Chinese want to exert export controls on rare earths.
Correct.
Trump found that to be not to his liking and took to Truth Social and laid out a number of things that could occur in terms of retaliation. Market didn't like it when it first happened, and then as they hashed through the retaliatory posts or the potential for retaliation posts, they liked it even less. And the algos got on board because they had their headline, and down we went, doing what I believe to be, on a daily chart, significant technical damage. We had hopeful looking chart right down below those moving averages, and here we are well off. That's all the moving averages. Am I right about that?
Yeah, all of them, right? It was just this spaghetti of moving averages that we have been stuck below that 1020 to 1028 area and unable to break above them. I mean, and it wasn't just for a day, right? We spent a better part of almost 2 weeks, a week and a half here, really trying to struggle with them. And then just today on the back of basically a tweet and some negativity, just fell back off of that very quickly. Like we said before, it's remarkable after all this that we held $10 today, but we are also, Joe and I, before the broadcast began, we're going and looking at option expirations in 2 weeks. That $10 strike had 28,000 open interest and traded 18,000 contracts today alone. So talk about, a heavily traded, heavily participated, heavily eyeballed level on the charts that clearly the market stayed above at this point, but has a lot of participation at that put on that strike, protecting any kind of downside move. So that to me screams not only our commercial interests and farmers using that area to put in a hedge, which I don't think is a bad idea, but there's probably a lot of speculation now with that area. And it just, you look at a chart, you can see it, you can see the strike getting participation. We've got 2 weeks to send those options in the money or not. And I think it's going to be a nasty fight, and there's going to be some volatility and some movement. I mean, that's easy to say when the market's consolidated, this much and has finally got one of, honestly, this is probably the biggest range day we've had outside of the October 1st. We got to go back to maybe one day here in September or all the way back to August to see days where we've seen this much of a range.
Take a look at the weekly chart though. So certainly creeping down to the low end of the range, and that weekly price action here, the pennant formation idea has long ago left the stadium. We're lower than any consolidated pattern would allow, but much ado about nothing. If you look back toward January and November, we've been here the whole time, right? I mean, we're kind of in the middle of the possible range. And what can you make of that? We go down, we go up. We go down, we go up.
Yeah.
It's very interesting.
Right. And the low end of the range is held, right? Like nothing about everything Joe said has changed on that weekly picture, right? And if anything, this chart says week over week, it was still higher highs and higher lows for soybeans.
Right.
We're still below some of those major spaghetti areas, but like this chart has not given us any sort of direction. And when you're at the low end of a range, high time, oftentimes you can consider or expect the market to trade back towards the high end of the range if you don't break below it. So as crazy as it is, neither corn nor beans really gave anyone any reason to think that they are hell-bent on any direction this week just from today's price action alone.
That is pretty crazy. Because you look at what happened today and think, oh my gosh.
Right. You see, oh, what? Oh no.
Yeah.
But reality is we didn't give anything up that we haven't held or done before. Grant, it's not great to see that we couldn't make more progress leading into this event, but here we are.
Take me to the other side of the ledger where we're talking about December live cattle. Open the week at 234.40, high 242.82 and a half, low 233.75, close 242.52 and a half, up 8 full points. Dan, most of that happened after being down almost 2 full points this morning. I think maybe 2 points plus, and then to rally the way we did and close this week at 242.82 and a half was just truly 243.57 is the high for the move from 1, 2, 3, 4, 5. What is that? 6 weeks ago in August. My goodness, that is a heck of a move. You and I were scrambling. We're early in the day here, and the news wasn't easy to get to, but we're betting that cash trade had developed early morning. There was $1. What'd you say, Dan? We were $1 higher down south.
Yeah, we were doing some research, Joe and I, before this to figure out where those markets might be settling here today. And it's funny because into that a morning report we were reading, like they had not published it in markets where cash markets were up $1 on the day at that time, but the feeder and fat markets were at their lows of the day. So it was the cash markets were up $1 over the prior day's bid. Right. But feeder and fats on the board were down off of yesterday's highs and down on the day. Whatever cash activity happened, I would say at those midday auctions was probably enough to get some interest back in these markets and to take them back up to highs here into the end of the week. I think that's more or less what we saw. I don't think there's any argument there that cash prices were still bid on the day. Auctions must have went well. We don't have those reports just yet, but I would be willing to say that's probably what happened, considering they were holding strong in the face of selling pressure on the board. And look, cash is king. Markets rallied to the highs and finished the week out strong.
All the way into the close, today's price action quite different from corn and beans, where you had a significant outside day with lower prices in the morning, and then closed at that 242.52, taking out the swing high from what is that? A week or so ago, right? The swing high from last month on the 22nd.
Yeah. So if we're looking at the feeders, right?
We're looking at live cattle still.
Yep. I was going to say the feeders took out those levels and have led. We took out that swing high on the 22nd here, but have not taken out that contract high up on August 27th yet.
Right.
We leave ourselves just begging to basically gap up and hit those levels here in early trade next week. I wouldn't go sit here and say that that's absolutely going to happen, but with the feeders, which we'll get to here in a second, right? Clearly already up into those levels. They're going to pull those fats higher here Not saying it's all going to be a top at once, but boy, that's how tops want to form with some kind of technical indication. Obviously, this is where it potentially could happen from.
To your point, feeders opened the week at 356.35. High was 376.75. Low 355.15. Closed 375.90. A change of 20.47 and a half on the week. Feeders early on driving this market. New case of New World screwworm reported in that Nuevo Leon or closer to the U.S. border. I'm not sure that you've got. Last week we were contending with the idea that maybe they were going to jab these Mexican cattle and start launching them over the border, but looks to me like maybe that idea is now sidelined as you've had another case. Hard to say. And here, this chart is begging me to not overthink this because you had a high of 367.65 in November feeders, and now you have a new high of 376.75. And so in my mind, that question is asked and answered. Certainly anybody with any technical acumen would be looking for this type of price action and say, okay, the first part of a blow off top is the blow off part, this technical strength. For me, with the fundamental situation the way it is, it's hard for me to assign high odds to a top in this area with the fundamentals the way they are, with the tightness in supply and the demand where it is. But Dan, I'll tell you, yet another example.
Agreed.
Or yet another idea about the American consumer coming under pressure. Looks like we've stopped buying some things and stopped using some credit. So we'll see more and more the case for a retrenching U.S. consumer solidifying, right? But this chart begs to differ a little bit, I guess.
That's the wild thing about cattle, right? I mean, it was completely immune to today's volatility. You saw bonds rally, gold and silver have been on a tear. The stock market indices fell apart, and clearly maybe that weighed on the market early today. But then cash is king. The market didn't care, and to the end of the day, this thing took off. We went up to highs, and we're going to have to keep asking ourselves the question: at what point does the U.S. consumer look at a cut of beef and say, nah, that's too much. I'll go with something else today? Or is it at $10 a pound for ground beef? Is it at 15? If markets keep going this way, we're going to find out.
And the other thing that I would caution, I would say with Mariah Carey warming up on deck, I saw a meme yesterday where they're talking about defrosting her. This move here could be the beginning, at least the outward signs. Certainly they've been making moves behind the scenes to make it easier, but this could be your supply chain, your channel movement for the holiday season. Going to be a lot of holiday parties, red meat, certainly a feature at a lot of them. And this could be the beginning of that, where these suppliers are having to recognize that they're going to have to scramble and maybe bid for some of these supplies. Box beef has shown some weakness, but if these folks have to come after it, it's going to be difficult for that. You know, that idea that cattle's topping just isn't going to be there in the cash and products.
Yeah, no, I completely agree with you there, right? Like, it's going to have to trickle through, because if consumer demand continues to prop things up, the box beef doesn't come down, this market will, I mean, right? The only answer for high prices is high prices, right? You're going to price ration out that demand.
I try to also scratch out some sort of connection between today's rhetoric between the Chinese and the U.S.
Yeah.
Maybe that means also that we're not going to be arranging anything with the Brazilians for that Brazilian beef to make its way into the U.S. And without any Brazilian meat, it's hard to see the products able to trade much lower than they have.
Yeah,
That's my opinion.
Absolutely is.
That's just an opinion.
No, I don't disagree with you. I think you're hitting the nail on the head here, because at the end of the day, the market knows best. And until we find alternative solutions to quell demand or to satiate the supply that we need, or satiate the demand and to increase supply, we're going to be caught in the same turnip truck for quite some time.
Yeah, for sure. Dan, did we miss anything?
I don't think so, Joe. Well, thanks for listening to the Zaner MarketCast today. If you need more just because you can't get enough of us, You can follow us on Facebook, Twitter, and LinkedIn at Zaner Ag Hedge. You can also get the daily market commentary by signing up for the Zaner Ag Hedge hotline hosted by the one and only Ted Seifried. It's free and gives you access to daily market commentary and chance to connect with us personally. You can sign up for the links in the description and comment section of this video. And if you'd like to get a question answered on the air, you can do so as well with similar links in that section. Thank you again. Be sure to like, comment, and follow along to not miss a beat. And we'll be back with you all as price action develops.
Have a great weekend.